This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on September the 11th, 2014. It's a Thursday. We've been taping our show on Thursdays during the time that Harold is in Colorado, working and enjoying a bit of the summer and late fall. Don't forget, you can connect with Harold at any time through rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. Our radio show runs on your favorite radio stations, 630 CHED in Edmonton. We're on the air Sundays at 3. And we have a podcast as well through iTunes. Go to iTunes, type in The World Financial Report on Radio. Our radio show is portable. We go anywhere you do. And the shows are streaming on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. And we really advocate in the times that we live in today that you have hard assets as an insurance policy in your portfolio. As mentioned on a past show, Yvonne van Greyers saying, one thing is certain, if you think the risk of a fire is high, you buy fire insurance because you definitely can't buy it after the fire. And with what's going on in the world, financially and geopolitically, you need that insurance policy in your portfolio of diamonds, gold, and silver. Obviously, today is the 13th anniversary of 9/11. Harold started doing the show shortly after 9/11. I joined him in February of 2002. And it's the 6-year anniversary of the financial crisis. And we taped the show on Thursdays. Last Friday, a very poor jobs number out of the United States and in Canada. And of course, U.S. President Obama coming out and speaking about his plan for going after ISIS. We have the situation in Scotland. Scotland potentially getting away. We know a lot about this in Canada. Obviously, Quebec has voted a few times to separate from Canada. Scotland wants to separate from the rest of the UK. And that could cause some serious financial ripples in the stock markets of the world and financial markets in general. Also, the Ebola situation continues to be a problem. Harold, geopolitically, financially, here we are, 13 years later since 9/11. And it started a ball rolling that really has not stopped. And that means that people really should have an allocation of hard assets in their portfolio at all times as an insurance policy.
You're right, Randy. When you sum up everything like you did just now, it's very, very concerning. The situation with Scotland really could send the whole financial markets in Europe in a tailspin, and most of Europe is in a recession right now. That's what you're seeing in the currency markets. You've seen the gold market drop every day this week. Right now we're down another $8. We're trading at $12.41 in gold, and we're trading down 27 cents in silver. We're trading at $18.77. We've actually been as low as $18.47 in silver. Now, the reason that the market is falling this week is primarily due to the American dollar. And it's not that the speculators or the hedgers are going out and buying the American dollar. The American dollar is going up because the euro and other currencies are going down. You see, in Europe, they're in a recession. Italy's in a recession. Germany's in a recession. We know that Greece and Spain and Portugal and many other countries inside of Europe are all in financial trouble. So basically, their currencies are dropping. It's actually the euro that is dropping. It's not the U.S. dollar that is rising. I know that may sound crazy, but the fact is nobody's buying the U.S. dollar. What they're doing is they're selling the euro, and that's why the U.S. dollar is trading at 84 cents right now. So the bottom line is that there is a direct correlation between gold, silver, and the U.S. dollar. When the U.S. dollar is strong, the gold market sells off, and that's what it did this week. But it's not due to any type of economical situation. It's not that the economy is so good in the United States that the dollar is gaining strength. It's just the opposite. It's that the economy is so bad in Europe that their currency is falling. So in the meantime, as the U.S. dollar gains some strength due to the fact that the foreign currency markets in other parts of the world, mostly Europe, is falling, That's what is pushing down the gold market at this point. Now, we don't advocate buying and selling gold. We don't advocate trading gold at this point here. That's not why you're buying it. You're buying gold and silver as a hedge against what's coming. We don't know exactly when these markets are going to turn around. We don't know exactly what these geopolitical situations are going to do to the marketplace. What we do know is by printing as much money that has been printed over the last several years, it weakens the dollar to the extent that we are going to see inflation. All they've been able to do and what they've managed to do at this point here is hold off inflation, whether by working with the numbers, making things sound a lot better than they are. But the bottom line is that you know yourself, the everyday consumer knows that there's inflation because food costs have risen substantially, and even though oil is sold off over the last couple of weeks, oil prices are still high. So the bottom line is that we've seen food prices skyrocket this year. We have seen currencies fall this year, and with a weak currency and high commodity prices, that's inflation. It means that your dollar doesn't buy as much as it used to, and basically, if you make the same amount of money but the cost of living goes up, that's inflation, and that's the reason why you want to own hard assets. There's absolutely no reason in the world to believe that we are not going to have inflation. In actual fact, it's already here. It's just that they don't show it in the numbers. And you know it yourself because when you go to the grocery store, you know that your dollar doesn't buy anywhere close to what it used to. So at this particular point, with the situation in Europe, being in a recession, it's dragging down the euro, which is supporting the U.S. dollar, which is why gold and silver are falling at this particular point. However, you must also understand that a recession in Europe will also lead to a recession in the United States because we're trading partners. We do everything. All the banks interact. We export, we import, we do business. And the fact is that Europe will drag the United States into a recession. And by the way, there are several very sharp analysts throughout the world that already believe that the U.S. is in a recession, but there's no way in the world that the U.S. is going to admit that at this particular point. So the next stage that's going to come is that we are going to see that as the recession gets worse in Europe, it is going to affect us here in North America, and it is going to affect the markets here also. So when I say that we don't trade gold, we don't buy and sell it, we don't speculate with it, we don't buy futures contracts with it, we buy physical gold and silver, and we keep it on us, we hold it. Because the bottom line is that we don't know when this will happen, but it is going to happen. You will see gold not only get back to the 1900 to 2000 level that we saw in 2011, but you'll see gold go far beyond that. There's just way too many factors out there that will influence the price of gold and silver and other assets like that you do want to have some protection in that market. And when Randy said at the beginning of the show, you know, his analogy on fire insurance, you don't buy fire insurance after the fire. You don't close the barn door, you know, after your horses have run away. So basically, what we're talking about is being cautious at this point. We want to make certain that we protect what we have. It isn't always about making money. At times it's about preserving and keeping what you have, and that's one of the most important things that you can do at this particular point. Because the bottom line is that as the economies around the world get worse and worse, it's going to affect all of us. And as we start to get into the inflationary markets, you're going to know that that's happening when the market starts to rally based on inflation news. By that time, it's already late. It's too late. At this point, we're able to buy silver below $20. We're able to buy gold below $1,300, even though it's probably going to drift lower than where it is right now because this move is not over yet. We're going to be able to buy silver and gold at extremely good prices and then sit back and let the markets do their thing. And again, I've been in business 35 years. I've traded these markets for pretty well that period of time. I was in the gold market back in 1979 and 80. I've traded gold, oil, currencies, commodities for most of my life. So I know what these markets are capable of doing, and I know that they give you no warning when that market is going to run. And basically, we were in the market back 13 years ago 14 years ago when the price of gold was at $250 and nobody was even thinking about gold. Very similar to what we're in right now. Gold is not on everybody's mind. Most people in the United States that do trade, they trade stocks and they trade bonds and they invest in real estate. They don't know about alternative investments. They're comfortable, in those type of markets. But those are the worst markets you could be in at this time, because you've got a stock market in the United States that is not increasing in value based on what it should be, the strength of the U.S. economy. The only reason that the stock market has gone up is primarily because of quantitative easing and the amount of money that has been put back into the market, and the fact that interest rates are almost at zero. So people with money, corporations with money, the guys that are in the know on Wall Street, they obviously are borrowing money at 1% or 2%, and if they're getting 5 or 8% return, they're doing tremendously well. But the general public can't do that, because the general public doesn't know how to do that, number one, and number two, they don't have the money to do it. So the bottom line is that the markets, especially the paper markets, the stock markets, mostly in North America, are not based on what the economy is doing. It's based on how much money the Federal Reserve and the U.S. government put back into the marketplace. That is not a recipe for success in that market. What it basically means is that the market is on is on thin ice and on a very, very flimsy foundation. And when this market falls like it did in 2008, it's going to fall substantially again, because there's no foundation to it. So all in all, if that's where your money is and you're comfortable with it, so be it. But with my 35 years experience in the business, I'm certainly letting you know that there is no way in the world that we are not going to see higher gold and silver prices down the road. Do we know exactly when it's going to happen? No, we don't. But that doesn't matter. If you own your physical gold and silver, if you own your diamonds, if you own your art, if you own those tangible hard assets and you hold on you, you're going to see a time within the foreseeable near future when this market is going to run, and you're going to be one of the few that make money in this marketplace. Again, we're buying gold and silver and diamonds and that type of thing as a hedge against all these things that are coming our way. Inflation, currency devaluation, unemployment, all those situations that are coming, you need protection against. And if you don't, it's like having a fire in your home and not having fire insurance and thinking that you can buy it afterwards. It just doesn't work that way. These are no doubt the most confusing times. I'm sure there's people out there, especially new listeners to the radio show, that must think that we don't know what we're talking about. We've been recommending gold and silver, and the market has done nothing but drop over the last 3 years. Again, we're not trading gold and silver. We're buying it as a hedge against what's coming forward. And again, even if you own gold at $1,300 or $1,500 and the market's trading at $1,200 or $1,300 now, again, you only lose when you sell it. And we're not selling it because we're not trading it. We bought it as a hedge, as protection, as insurance against what's coming forward. So I own a lot of physical gold and silver. I own it outright. It's paid for. I've stored it in a safe place where I have access to it. Most of my money is in diamonds, gold, and cash at this point here, because you need cash to take advantage of certain situations. Personally, I have nothing in the stock market, nothing in the bond market, and I have nothing in the retirement savings plan market either. I just don't believe that those are the areas that are safe enough to put your retirement money into and where you're going to get the biggest returns. The biggest returns by far will be in the hard asset market over the next 4 to 5 years. We will see increases in this market that defy description. So again, Randy, I'm comfortable with where we're sitting at this point here. The markets are not doing well, in actual fact, the market is doing what it's supposed to do, because right now, when the foreign currency markets are dropping and the U.S. dollar is strong, gold should sell off, and that's what it's doing. But that is not going to last for much longer. And again, I would certainly take advantage of the lower prices in gold and silver at this point, because the future does hold substantially high prices for gold, silver, and other alternative assets.
Connect with Harold about investing in hard assets at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. His telephone number, 1-800-432-1022. His auction website, we'll talk about it later in the show, is hsfineauctions.com. hsfineauctions.com. rarecoloreddiamonds.com. Telephone number to speak with Harold personally and privately, 1-800-432-1022. Get our free weekly newsletter. We send it out via email free of charge every week. And we want you to be reading the same stories that we are when you're listening to the radio program. If you're getting any other newsletter, you're not getting the official World Financial Report on Radio newsletter. Get your name on our list today. One of the interesting things that has been spoken about for a long time, and obviously GATA, Gold Antitrust Action Committee, has been leading the charge about gold manipulation. And as Harold and I have spoken about, we're at a time where all financial markets are manipulated. And Alistair McLeod said this week, so why does it matter if the gold price is rigged, or really any market for that matter? A freely determined gold price is central to ensuring that reality and not financial bubbles guides us in our financial and economic activities. Suppressing the price of gold is rather like turning off a fire alarm because you can't stand the noise. And that's very important to remember in the times that we live in. Gold has always been the canary in the coal mine. And by them manipulating it, we could wake up one day and find things have gone sideways because it hasn't been allowed to be the canary in the coal mine. That's why we advocate, be safe. Obviously, profit and protect the money that you have by having an allocation of gold, silver, as well diamonds in your portfolio today. And Harold, he will be happy to speak with you about investing in diamonds and gold and silver at rarecoloreddiamonds.com or 1-800-432-1022. As we've mentioned on past shows, Egon von Greyer is saying one thing is certain. If you think the risk of a fire is high, you buy fire insurance because you definitely can't buy it after the fire. Even if you had a small allocation of diamonds and gold and silver in your portfolio, something along the lines of 5 or 10%, at least then you are covered if we run into a situation where maybe Scotland does separate from the UK. God forbid, ISIS does attack. Something serious like Ebola, or even further financial crises, because she's actually a senator out of Massachusetts. Her name is Elizabeth Warren. And she was on David Letterman's show recently and said that nothing has changed when it comes to the financial markets. Wall Street, big banks are still taking massive, and she says massive risk when it comes to the leverage they are using. And that's what got us into the financial crisis in the first place. Nothing has changed. Nothing has changed at all. The only thing we can do, knowing and having the knowledge 6 years on from the financial crisis, that things have not changed, we protect ourselves with our own insurance in our very important portfolios that will carry us monetarily through the rest of our life. So we know about it. We should protect ourselves. And someone like Elizabeth Warren, a senator out of Massachusetts, coming out and saying that nothing has changed, definitely should be a wake-up call for everyone. Jim St. Clair, one of the guiding lights when it comes to investing in hard assets, said this week, cycles are best understood as probabilities for directional movement. Those gold cycles that have turned down at 1900 have now turned up with the price of gold now plumbing previously lows, which are, by definition, major support. The price objective, once this experience is over, is $2,100 and is where it will trade in time. David Tice is, we talked about on the last show, very concerned about a major pullback in the stock market of 50-60%, and he believes that we could see $3,000 gold. Jeffrey Sott, who is an advisor with Raymond James, came out and said, why haven't we seen a double-digit correction since April and June of 2012 in the stock market? In fact, we've not gotten anything more than a 6% pullback since November 2012. My clients are asking, why no pullback? It seems unnatural. And we have a chart in our newsletter this week, Harold, showing that exact thing, that we have not had a pullback in the stock market of 10% in a number of years, which is very, very concerning. So it's just a matter of time before we get a major pullback, and people need to be aware of it and position themselves accordingly, because you want to have your safe assets, you want to have your insurance policy in place before we potentially see a big pullback in the stock market.
You bet you do. And again, this is not your normal stock market, just like this is not your normal gold market. The fact is that both are being manipulated, one to the upside, one to the downside. But again, I've been in this business a long time. When you do that, because these markets have trends, especially the commodity markets, you could trend a certain commodity market like gold going back, decades. So basically, these markets have trends, and there's support and resistance levels, and there's different types of situations where you can determine which way a commodity is going. And none of that is working at this particular point, because these markets don't make sense, because they're being manipulated. When a market trades on its own, it's going to have its ups and downs. You're going to have see, when you trade commodities, as an example, and if you're an experienced trader and you look at the gold market and you look at head and shoulders, different types of formations, and you look at stochastics, and you look at all the different avenues in which us analysts use to detect which way the market is going to go. None of that is working right now. The fact is that the support and resistance levels are not holding, because the market is not trading on its own volition, but eventually it will again. And when it does, it's going to correct in a big way. You see, the market never should have fallen from 1900 down to 1180. It was made to do that because they couldn't deliver the amount of silver with the outstanding futures contracts. We've discussed that before. So they brought down the price of gold artificially. There was no reason why gold would have dropped that much at that particular point, because there was nothing in the market that would have shown that that was about to happen. That's the unfortunate thing about the markets today. The governments are so desperate, they're in so much trouble that they just don't care. They're going to do what they're going to do to try to right the ship and try to make the people of the United States and around the world that trade in the United States feel comfortable again, feel that the markets are strong and reliable and capable. We all know, those of us that are in the financial markets, all know that this isn't true right now. We saw it a few years ago in the commodity markets when one of the top futures commission merchants stole everybody's money, and they never made good on the money. So basically, we're seeing things in the markets right now that years ago I would have thought would have been impossible to see, but we're seeing it now. And again, the bottom line is that, as they always say, you can't fight City Hall. How are you going to fight the government? How are you going to put together a lawsuit, against the government? You'll never, ever be able to prove it. But the bottom line is, it is happening. Gold and silver never, ever should have dropped from the $2,000 level in gold and the $50 level in silver. It was made to do that, and eventually, because that has happened, the market will not only come back to those levels, but far surpass that. That's why we're saying that right now gold and silver is probably one of the better investments you could make, because it's off the radar. Nobody's even thinking about gold and silver right now, and that's the best time to own it.
Connect with Harold about investing in hard assets at rarecoloreddiamonds.com or 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping this show on September 11th, 2014. 13 years since 9/11. It's amazing how the time has flown by. Remember that day as if it was just happening moments ago. It was one of those days that is just etched on your mind, and we remember all those lives that were lost as a result of 9/11. 6 years since the financial crash originally started. And last Friday, we had very poor job numbers out of the United States and Canada. As a result, here in Canada, the government, Harper government, looking at pulling back EI, the amount that we pay for EI to try and boost the economy. Also, ISIS, U.S. President of the United States, Barack Obama, spoke about ISIS and his plan yesterday to deal with them. Scotland could separate from the UK, which could really cause a lot of problems in the financial market. And Ebola continues to be a major concern around the world as well. That's why we say have an allocation of precious metals and diamonds in your portfolio at all time. And don't forget, our radio show, we're online. We're there for you 24/7 at HESradio.com and rarecoloreddiamonds.com. The shows are streaming. We have a podcast through iTunes. Type in The World Financial Report on radio. You can find us there, the podcast. We're portable. We're on your portable device anywhere you go. And I think before we talk about diamonds, one story I wanted to mention briefly, and this is a quote from Rick Rule. This really puts into perspective why we want to own hard assets. And he says, the long-term bets on gold and silver are pretty obvious. The alternative to gold is U.S. Treasuries, including the benchmark 10-year. The 10-year yields 2.7% in a currency that I strongly believe is depreciating at a rate of 5% compounded each year. That means the value proposition over the long term is that over 10 years, your purchasing power is diminished by about 40%. That doesn't seem very attractive to me. It appears to me like the United States government is suggesting that if you give us $100,000, we absolutely promise to give you back $60,000 in purchasing power 10 years from now. This is just one of the many reasons that I prefer to own gold in the short, intermediate, and long term. And Harold, basically very succinctly put by Rick Rule of Sprott USA, that's why we advocate having diamonds. That's why we advocate having gold and silver in your portfolio to obviously offset currency issues and as an insurance policy in your portfolio against geopolitical trouble. But Rick Rule says it all there, and that's why we're saying go to rarecoloreddiamonds.com, take a look around, take a look at our featured diamond of the week. It's an absolutely stunning diamond. It's a 0.45 carat oval cut, fancy intense pink argyle. Make an investment in that diamond, have a diamond portfolio, and get away from U.S. dollars or even Canadian dollars where ultimately you're losing money because you're being debased. The hard assets like gold and silver and diamonds will protect you from that, Harold.
You bet. Now, the big difference is that, gold and silver is traded in U.S. dollars. Diamonds can be traded in anything. They could be sold in Europe. They could be sold in England for British pounds, which are worth much more than Canadian and U.S. dollars. So basically, diamonds are different than any other investment. They don't trade on exchanges like stocks and commodities do. You see, when people trade stocks, when you buy a stock, you're buying a stock from somebody who's selling it, that doesn't want it anymore, that may have a totally different view of what you have for that particular stock. Same with a commodity. You may be buying corn because you think there's going to be a drought. However, they're selling corn because they don't think there's going to be a drought. So that's what makes the markets do what they do. There's buyers, there's sellers, they pit them together in exchanges, and that's what makes the markets move. If more people are bullish on a market, the market goes up. If more people are bearish on a market, the market goes down. But it's totally different with diamonds because they don't trade on exchanges. Diamonds trade via private sale and via auction. And basically, diamonds are a totally different market or a commodity than anything else that you've ever owned, because the fact is that the ones that we offer, these are extremely rare. And even though when we talk about Christie's and Sotheby's auctions and diamonds selling for $15 and $20 million, where we do have some of those diamonds, let's face it, most people don't invest that kind of money. Most of my clients that invest in diamonds invest anywhere from $20,000 to a couple $100,000. For $20,000, you can buy a 1-carat yellow flawless diamond that increases by 15% a year. If you hold on to that diamond for 10 years, your $20,000 diamond is now worth $75,000. But I highly doubt you can say that about any other investment. Because the fact is that when you have buyers and sellers trading commodities and stocks back and forth, again, you get that volatility and you get people's view as to what they think that market's going to do. People buy diamonds for a totally different reason. They buy it as a hedge against inflation. They buy it if they're concerned that their currency is going to fall. They buy it because they're concerned about the government that has confiscated assets before, like gold and other situations like that. The U.S. government has definitely confiscated gold in the past. and some people feel they will do it again if the situation gets bad enough. We've seen the U.S. government do things that we just sit there and shake our heads and say, how in the world did they get away with that, and how in the world is that possible? But that doesn't happen in diamonds. The other thing about diamonds is it's real estate in your pocket. If you wanted to, you could walk around with $1 million diamond in your pocket and nobody would even know it, but you could never carry that kind of money on you, in cash type of thing. Also, diamonds are portable private wealth. If you needed to relocate, you could take that diamond with you. If you own it outright and you have your paperwork for it, you can cross any border as long as you do the right thing and bring it back with you. If you're relocating to another country, it's very difficult to take cash or stocks with you, but a diamond is very easy. The other thing is that there are opportunities in diamonds just like they would be in any other commodity. For example, the featured diamond this week is a pink diamond. Now, a pink diamond is a very, very rare diamond. They're considered the most concentrated form of wealth in the world because pink diamonds are they're very, very rare. Very few of them exist, and the ones that do exist mostly come from one mine in Australia. It's called the Argyle Mine, and it produces 95% of all the pink diamonds in the world, but it's a very, very small number. It's less than 200 carats a year. So basically, this phenomenal mine that produces these amazing pink diamonds, some of the best investment diamonds in the world come from the Argyle Mine. We have a very rare situation. The Argyle Mine, is getting ready to close down. It's been in operation since 1986. It produces 30 million carats of diamonds a year, but only 2% of those diamonds or less are considered investment quality. So you're talking very, very small numbers. However, when this mine closes and 95% of those pink diamonds are no longer, you're going to see the prices of these diamonds skyrocket in price. They could go up 10 times what you paid for them in a very short period of time. We will never have another opportunity to do this again because this is the only mine in existence that produces these pink diamonds and is going to close down. So basically, this is a very rare opportunity. I think that the price of pink diamonds can increase 1,000% from the prices they are right now, and this is all going to happen within the next 6 years. So if you look at yourself as a longer-term investment, and let's face it, most people put money away for retirement. If you were to put $100,000 into your retirement savings plan, you don't know what you're going to get back. In actual fact, for many, many years, most Canadians never made a penny or hardly anything on their retirement savings plan. In fact, they've only almost gotten back to where they bought it. So here you've been in the market for over a decade and you haven't made any money. If you were to take $100,000 and buy yourself an Argyle pink diamond and put it aside in your safety deposit box, you would see that in 10 years from now, you would have substantially more. In actual fact, that $100,000 could turn into $500,000. It could turn into $800,000 or $1 million, and it's done it before. Diamonds are longer-term investments. But 50 years ago, a friend of mine's grandmother bought a pink diamond for $50,000. It's now worth close to $4 million. 10 years ago, I bought a 2-carat vivid pink Argyle for $350,000. That diamond is worth over $3 million today. It's gone up 10 times what I paid for it in 10 years. So those are the type of investments I'm talking about. I'm not talking about risking your money in the stock market or commodity markets or doing whatever you do, playing around with real estate. Everybody wants to make money. But as an alternative investment expert, and that's where my main business is, I just came off of Fox News. I've been on Bloomberg 4 times in the last year. I was interviewed for an hour here in Aspen just about a month ago, and it's all on an alternative investment, diamonds. That's what the interest level is. People want to know about other investments that are not stock and bond and real estate related because, let's face it, most people got their financial head handed to them in 2008, 9, and 10. That doesn't happen in the diamond market because they don't trade on exchanges. You don't get that volatility. And the other thing is most people don't own diamonds. They don't know about them. We're educating people. That's why, again, Fox News and Bloomberg was so interested in our product and what we do. The one negative about owning diamonds has been in the past that they're hard to resell. So the fact is that where would you go to buy a diamond? You go into a jewelry store that you're comfortable with, and you sit down with the salesman, and they tell you how beautiful it is, and you put it in a ring, and you give it to your beautiful wife, and she gets a chance to wear it. But then 5 or 10 years down the road, you want to sell it for whatever reason. You go back to the same jeweler, and he offers you half of what you paid for it. So how in the world is a diamond a good investment when something like that happens? And again, I was always aware of this. So when we started the investment diamond business about 10 years ago, basically we had to create a secondary market so our clients could resell. And that's the biggest contribution that we've made to the diamond business is H. Siegel Fine Auctions. And that's why Fox and Bloomberg and all these stations are so interested, because we created this secondary market. We now have a market where our clients can sell their diamonds to clients all over the world, because we have a virtual auction business where people in China and Australia and Europe can attend our auctions from the comfort of their own home, and from Canada and from the U.S. or whatever. So this has taken the business world by storm. We also raise money for charity. We are the first company to ever use diamonds to raise money for a charity, for Susan G. Komen Breast Cancer Charity, and we've raised a ton of money for them. As a result of the success of that, we've just been contacted by other charities that want to use our auction website to raise money for charity. And this is why we built it. As they say, build it and they will come, and that's exactly what is happening now. Now that we've been in business, in the auction business, for going on our 3rd year, there are corporations and charities and nonprofits out there that see the merit in what we do in using diamonds as investments to offer to their friends and people that donate money to their charities. And the reason that we do this is because it's one thing to donate money, and you feel great about that, and I feel great about the charities that I donate to and that I support. However, you're also looking at a situation where the people that are buying these diamonds are also getting tremendous value. It's not that not only are they donating money, but they're also getting tremendous value for their money. And the fact is that you will see what's going to happen in the diamond market, especially the pink diamond market, over the next 6 years. And if you're not included in it, you will never, ever have another chance to do this again, because there is no mine in existence that does what the Argyle mine does. The diamond that is up as a featured diamond this week is a very rare, oval, intense pink Argyle. That particular diamond will go up more than almost any investment that you have ever seen, and they never ever go down in value because there's hardly any of them. So when you talk about an alternative asset, that's what we're talking about. We're talking about diamonds, collectible diamonds that have tremendous track records. When we publish the reports from Christie's and Sotheby's on their diamond sales, they always feature 1 or 2 amazing diamonds, a 10-carat vivid pink that's going to sell for $20 million or a $50 million blue. But let's face it, that's not the reality. Most people can't afford those type of diamonds. But if you look closely at these auction results, the diamonds that went up the most were the diamonds that were under $100,000. A diamond that they thought would sell for $20 sold for $50, $60, $70, $80,000. Elizabeth Taylor's pieces, which we own, there was 4 pieces last year in 2011 that were supposed to sell for about $80,000 to $100,000, and they sold for $800,000. That's what's happening in the alternative asset market. And that's what we bring to you. We bring to you very safe and beautiful assets that will make you money, not just preserve your capital, but give you an opportunity to make a lot of money. If you're looking at your RSP and you're not doing well, if you're looking at your stocks and you're basically broken even over the last 10 years, if you're looking at other investments and saying, well, gee, I'm just not doing it and I'm not keeping up with inflation, take some of that money that isn't working for you and put it into a diamond. It'll be the best investment that you've ever made, and moving forward, especially these pink diamonds, they're going to skyrocket in price.
Our featured diamond of the week from rarecoloreddiamonds.com is a 0.45 carat oval cut fancy intense pink Argyle. rarecoloreddiamonds.com is the website. If you get our free weekly newsletter, from Harold. We'll send it out to you via email free of charge every week. Connect with Harold at 1-800-432-1022, 1-800-432-1022. Harold will be happy to speak with you personally and privately about your investments and why we advocate hard assets like diamonds, gold and silver. RareColoredDiamonds.com or 1-800-432-1022. Our featured diamond, a 0.45 carat oval cut, fancy, intense pink argyle. On the website, click on Featured Diamond of the Week. You can see the video. In our newsletter, we have a picture for you. One story I think is very important for us as Canadians to hear, and we have it in our newsletter, and this is within the wheelhouse of owning diamonds, also gold and silver. This is a story that I would really encourage everyone to take a look at, and this is verified from a banking seminar that I went to earlier last year. Presenting the most pitiful capitalized central bank in the West, and it's the Bank of Canada. So how strong is the balance sheet for the Bank of Canada? Not very, as it turns out. Bank of Canada is actually the most pitiful capitalized central bank in the Western world. They're in such bad shape, they actually make the Fed look healthy. Hong Kong's Monetary Authority Exchange Fund is a good example of a strong balance sheet. Their latest figures as of the 30th of June show a whopping capital reserve equal to 22% of total assets. This is a massive margin of safety for the central bank. The U.S. Federal Reserve, on the other hand, shows a capital reserve of just 1.27%. It's 1.27, and Canada, a tiny 0.47, as in less than 0.5%. This isn't safety and stability. It's a rounding error. Moreover, Canada also has zero reserve requirements for its banks. This means that Canadian banks are not obliged to hold any of their customers' deposits. So yes, it's legally permissible for a Canadian bank to loan out 100% of its customers' funds. Not to worry, though, the CDIC, Canadian Deposit Insurance Corporation, is standing by to insure bank deposits up to $100,000. But when you look at it closely, there isn't much there for depositors at all. There's roughly $646 billion of eligible deposits in the Canadian banking system, yet the CDIC only has $2.8 billion in cash available to ensure a ratio of just 0.43%. Even more troubling is that Canada has legislated an actual Cyprus-style confiscation of deposits in the event that Canadian banks deplete their capital. Buried deep into the government's Economic Action Plan from 2013 is a provision that would implement a bail-in regime for systemically important banks. This would legally allow the banks to tap into customers' deposits if the banks get into trouble, which obviously is a major, major concern. Harold, I would encourage people to get this article, and it goes along with a banking seminar that I went to in the past here in Edmonton, and I would say that this is something that is of great concern, and that's why we advocate hard assets, diamonds, gold and silver. Have an allocation of diamonds and gold and silver in your possession at all times as an insurance policy, but because you can see, even though in Canada we got off quite well during the financial crisis, we were very lucky because a lot of it had to do with our housing market. But when you look at how the system is set up, if things go bad, Canada, we're in big, big trouble.
You know, you're 100% right. And the everyday, men and women, the families that work hard, they don't pay attention. They're not watching what's happening with the banks. They're not following it every second of the day. You would think that businesses take care of their business. They're not out to hurt the people that make their business successful. So when you put your money in the bank, you think that your money is safe and that it's being protected and it's the right thing to do. And whatever the interest rates are, if you're happy with it, you keep your money there. If you're not, you take it out and do something else with it. But all of a sudden something happens, totally out of your control, and all of a sudden your money is in jeopardy, in trouble. Just look what's happening in Great Britain right now with Scotland. Now, people go to work every day. They're doing their thing. They're trying to make their bills and live their life. And all of a sudden something happens, like Scotland trying to separate from Great Britain, and all of a sudden their currency gets affected. All you have to do, pull up a chart on the British pound and see what happened to the British pound within the last 2 weeks, and you'll understand what I'm talking about. All of a sudden, your net worth is X, and because your currency has fallen so much, it changes. And that has nothing to do with you. It has nothing to do with the everyday hard-working man and woman. It has everything to do with the governments. And again, you think that your money is safe, and all of a sudden you wake up one day and find out that all hell is broken loose, and all of a sudden you've lost a bunch of your money. And that's what's going to happen in Great Britain. That's what's happening in Europe. And that's what's going to happen here in North America. We saw it in Cyprus. We saw that the banks took away everybody's money and gave them worthless paper for it, and hardly anybody did anything about it. We never heard any repercussions because people, I guess it's their human nature, just to accept what they think the government or the regulators are doing to them. It's a crazy time. We're going to wake up one morning and find out that all the markets have changed, and then we're going to start trying to chase after it. We don't want to do that. That's the wrong thing to do. I'd rather be in there, 2 years early than 1 day too late. And that's exactly what it boils down to, because you don't know what these governments are going to do. Own diamonds. It could be sold in any other currency. You don't have to worry about your assets being in American or Canadian dollars. And if you want to know what the currency markets are all about, as Canadians, just go across the border to the United States and see that the Canadian dollar, which last year was worth more than the U.S. dollar, is now worth 10% less. And that's what I'm talking about. I'm talking about going to Europe and finding out that the Canadian dollar, buys 30% less than if it was the euro or the British pound. That's how important the currency markets are. That's why we advocate buying diamonds, because if the currency markets in North America go south, if the U.S. dollar and the American dollar and the Canadian dollar continue to drop, we'll sell our diamonds in British pounds and pick up, British pounds and convert them and make our money that way. But you can't do that with any other asset, just with diamonds. And again, we've got this rare opportunity with pink diamonds where the mine is going to close. Randy, I'm very excited about the diamond market. I'm mortified about what's happening in the world economy, but I have no problem sleeping because I'm comfortable with the assets that I own. If I was in stocks right now, I'd be a nervous wreck.
Well, and as we touched on off the top of the show, Alistair McLeod saying that it does matter if financial markets are rigged, if gold prices are rigged, because when you suppress the price of hard assets or gold, it's like turning off a fire alarm because you can't stand the noise. But what it does is, the reality is, then we do not know if we're facing a financial crisis because you've turned off the fire alarm. We could be facing a serious situation, but the canary in the coal mine was never allowed to go into the coal mine. So that's why we advocate having hard assets in your portfolio at all times. We know nothing has changed on Wall Street. Take a look at our featured diamond of the week, a great investment diamond to start a portfolio, a 0.45 carat oval cut, fancy intense pink argyle. Absolutely stunning. Go to rarecoloreddiamonds.com and speak with Harold about it, or give him a call, 1-800-432-1022, rarecoloreddiamonds.com, or 1-800-432-1022. But as we've said before on past shows, if you think the risk of a fire is high, buy your fire insurance because you can't buy it after the fire. And Harold, it's so true with what Alistair McLeod is saying. A freely determined gold price, and this is for any asset really, is central to ensuring that reality and not financial bubbles guide us in our financial and economic activities. If we're being guided wrongly because of manipulation, and he's using the term of turning off the fire alarm because you can't stand the noise or you don't want to face the reality of what's coming at you, then we can be blindsided, and we don't want anyone to be blindsided in the times that we live in geopolitically or economically. And Harold, we have about 30 seconds left.
Well, I think you summed it up beautifully, Randy. These are very difficult, concerning, scary times. It's the 13th anniversary of 9/11. We've got enemies all over the world. There's people that, it's just a very concerning time. And again, my suggestion is be conservative, don't speculate, and own the right assets.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. Harold's auction site is hsfineauctions.com. Take a look around. More auctions coming up later this fall. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.